This video is going to talk through exactly how to enter minor structure entries from the 15-minute level, the deep test zone, and the start of structural push deep test zone. So the way we enter them all is the same with a minor structure setup. When it is a minor structure retest, you can enter on the first entry trigger you see. And our entry triggers are going to be and are pin bars or engulfing candles. But the key thing is that they must be closing the same bias as your entry. So for example, if you are taking buys, you must be entering on a bullish engulfing candle. And if you are taking buys as well, with a pin bar, it must be a bullish pin bar. So the body must be bullish on both of those candles, on the pin bar or the engulfing entry. With sells, your entry candle must be a bearish engulfing candle with a bearish entry body, of course, or a bearish pin bar that has a bearish body. So first off, let's get into this entry on AUD/USD buys. We've talked through the analysis process for all three of these, so I'm not going to go through that again. Just going to explain the entry. This is from the 15-minute level. So when price pulls back, as soon as it touches the level, price is retesting. So when it gets here, straight away, we can look for an entry. And as we see on the 15-minute, it was a minor pullback because price just pulls back all at once. There's no other structure. There's no bearish structure broken down on the 15-minute there. So it's a minor setup. So straight away, I'm looking for an entry trigger. And we find it straight away in this bullish engulfing candle. Don't get fixated on whether or not it's a big strong candle, whether there's wicks anywhere. If the body of the second candle engulfs the body of the first, it is a valid entry. So therefore, we'll take our entry. We will enter at the candle close, and we will place our stop loss, as this is Aussie dollar USD, 2 to 3 pips past structure. So by that 2 to 3 pips, what I mean is, it is maybe a simpler way to put it would be add 2 pips on and then round it up to a whole number. We're never going to have, like a 4.5 pip stop or a 6.7. It's always going to be a whole number, i.e. 4, 5, 6, 7, a whole number. So here, this is currently 3.7. If we added 2 on, it's 5.7, and then round that up to 6. That is between 2 and 3 added on, because to get from 3.7 to 6, we had to add on 2.3. Our take profit is also going to be 1-to-1, depending on the entry or the targeting strategy you use, whether you use 1R, 1.5, or 2, that will vary. But we're always going to talk about 1Rs because those are the stats that I base on, and those are the entry and targets that I use. So our stop loss is formed and our take profit is formed. We entered on the first trigger that formed on any level on the retest, and it happened to appear on the 15-minute level in this case. And there we go. We just let price do its thing, and this was a take profit. Very, very simple. Minor structure trades are our bread and butter. They are the vast majority of our trades. You literally have to wait for the first entry trigger you see once price is retesting. It could form on the 15-minute level, could form on the deep test zone, it could form on the start structural push. We don't know. That's why we wait for it to form. But when it is a minor structure retest, we wait for that first trigger and we enter like so. Here, we'll rewind back again. I've explained the setup already, so I won't do that again now. But price straight away comes back to retest. We can see from this wicks, price is retesting the level after it broke out. So we'll switch to the 5-minute, and we are looking for the first pin bar or engulfing candle we see. And what do we get? A bearish engulfing candle. Now, a key thing to add is when price is trading on a level, so for example, on the 15-minute line level, if the entry candle touches that level, we want it closing below it. So if we're taking sells and we're trading from the 15-minute line structural level, we need the entry candle to close below this level. And vice versa, if we're taking buys, as we did a moment ago, we needed that we needed the entry trigger, the bullish engulfing candle to close above the level, which it did. if, for example, we had price engulf here and close above, but wick it and touch it, it's not valid. We need price, if it is touching the level, to close below it. With zones, it can close in the zone. This is inaccurately drawn. If price is in the zone, it can close in the zone. That's fine. But with the 15-minute line level, price must close below for sells or must close above for buys if it is touching it. So here though, we set our entry. Our stop loss goes above the entry structure, and by structure, you can draw that out if you need. This high is the high we're selling from, as you can see. So as a result, the stop loss goes above the wicks of that high. This wick here is the highest wick of that high. We'll add 2 pips on to 8.6 and then round it up to 9 because it's always a whole number. So this is a 9 pip stop loss trade with a 9 pip take profit. And as you can see, price shoots down nice and quickly. Very, very, very simple again. We've waited for the first trigger that formed on the retest because it's a minor structure trade. And it's a minor structure trade because price didn't form any structure on the pullback as per the how to know whether or not it is a minor or major retest video. So finally, we've gone through a setup for off the 15-minute level. We've gone through a setup of the deep test zone. Now we will get one from the start structural push. So this is a setup we went through earlier again. You can see price is now coming up to retest. We're on the line at this point and it has not formed any entry trigger. And this is a good learning point. So we'll see here price has formed a pin bar, and this is a bearish pin bar. It's got a bearish body, really nice clean pin bar, but it's not closing below the level. So it's not valid off that level and it's not touching our deep test zone. So this is not an entry trigger. It is in no man's land. We must always wait for an entry trigger that is on a level. So either touching in or below the deep test zone, which needs to be adjusted up to the wicks, or closing, touching and closing below the level. The point of our 15-minute structure line and our deep test zones are to provide levels to trade off. So trade off them. Don't make the mistake of getting, impatient, fear, all of that stuff, and seeing a trigger and just jumping in. This is just a random candle. It's only a relevant candle and an entry trigger if it forms in a deep test zone or at our level. So price is still pulling up here. Again, another pin bar or two. They don't mean anything because they're not at any of our levels. And now we get a bearish engulfing. As you can see, the body of this bearish candle closes below the body of the white, so engulfing it. Therefore, this is our entry. We enter at the candle close. Stops go above the entry structure. This is the entry high. So price goes, stops go above the wick. So 8.5 pips to the tip of the wick, as you can see here. So we add 2, which is 10.5, and then round that up to 11. Our take profit is also 11. Note how price touched into the zone and closed below. If price had formed, a small candle and then engulfed closing in the zone, that's fine because it's a zone. It's only on the actual line level it must close below. Whereas with a deep test zone, it can close in the zone or below the zone for sells or vice versa for buys. So that's the entry. We then let price do its thing and down we went again. So 3 very simple minor structure entries. One from the deep test zone, one from the 15-minute line level, and one from the start structural push. Incredibly simple minor structure. First trigger is your entry, as long as it is on a level as I've just gone over there. And it's as simple as that. Again, stop loss gets placed 2 to 3 pips, above or below the entry structure. So above for buyers, below for sells. For all pairs except for GBP pairs and gold, which go 3 to 4. So just you give them that 1 pip extra space, just as some wiggle room because they're more volatile pairs that can sometimes go a bit closer. So that is, to summarize again, minor structure entries. Incredibly simple. We'll talk through some major structure entries now as well, which are far rarer anyway. You can trade, and there are many traders in the group who are funded off of trading purely these minor structure setups as we've just been through. Thanks for listening. I'll see you in the next video.